Hi friends, this is Dakshir and welcome back to Finance Insights. Today, I'll tell you about a very interesting thing which goes by the name of dollar smile. It is very relevant in what is going around in today's COVID crisis. But before that, I'll tell you about the US dollar index, which is used to track the performance of US dollar. In 1944, Bretton Woods Agreement set the exchange value for all currencies in terms of gold. Say for example, US dollar was converted into gold at $35 per 1 ounce of gold. By 1976, US government removed this US dollar and gold convertibility. Now, the Central Bank of USA needed an index to keep a track of US dollar's value. This is when US dollar index was introduced. The value of US dollar index is measured relative to the value of 6 currencies, which are USA's most significant trading partners. The weightage of these currencies in the index is Euro with 57.6% weight, Japanese yen with 13.6%, British pound with 11.9%, Canadian dollars with 9.1%, Swedish krona with 4.2%, and Swiss franc with 3.6% weight. In coming years, it is possible that this composition might change, and we see currencies such as Chinese yuan and Mexican peso replacing other currencies, as China and Mexico also being major trading partners of USA. Now, have you ever wondered as to why US dollar goes up both in times of uncertainties and times when the economy is booming? Stephen Jen, a former currency strategist at Morgan Stanley, came up with the term dollar smile. He says there are 3 stages to the performance of US dollar. Stage 1 is when in a weak economy, investors start shying away from risky assets and begin investing in safe assets like US dollars. Thus, as demand of US dollar increases, it goes up. Stage 2 is when central bank starts to cut interest rates to boost up the economy. The investors will refrain from investing in US dollars, thus it goes down. And stage 3 is when investors see light at the end of the tunnel. Thus, as optimism builds up, investors will return back to US dollars. This dollar smile was seen in 2008 financial crisis. When investors were looking to buy US dollar from 2008 end till March 2009, the dollar index went up. But as interest rates were cut, the index started going down and reached lowest levels by 2009 end. But in 2010 again, the investors saw potential recovery and the index started going up. This year too, as COVID-19 started impacting global economy, we saw US dollar index going up during the month of March. But when Central Bank of USA slashed policy rates to 0 to 0.25%, we saw US dollar index going down. Thus, we need to estimate at what point the investors will start coming back to US dollar investments and when they will see the potential recovery. There are other factors besides COVID-19 crisis we need to consider. For example, the US political elections, which will impact US dollar index in a big way. Thanks for watching the video guys. Hope you guys liked it. Please subscribe the channel and don't forget to press the bell icon next to it. You can also reach out to me on WhatsApp or comment below for your feedback and views. Now see you guys in the next one. Thank you.